Nobody's actually expecting a rate change in this meeting, but really it's about the communication, how they are viewing the activity data, the inflation data, that deceleration inflation. It's a bumpy path, yet it is moving in the correct direction for them. I think what will be quite interesting is how they discuss the forward guidance, but also obviously we had that change in the dots in the last meeting, which they may have to talk that back a little bit. So really it's a directional view that we're going to be looking for.
We still had a GDP print that outsized what the market had anticipated.
Yes.
Quite a lot, actually. And then you had that PCE number pretty much coming in line.
Yes.
It doesn't feel like it's only just bumpy. It feels like it's still very resilient. So they can afford to even hold off on making more drastic cuts from here anyway.
Yes, but also if you think about the communication so far, talking about not waiting until we actually hit that 2% target, actually moving preemptively before that. And there are some signs, if you look at the details of the labour market, there are some signs of labour market loosening there. And any reference to those features will be quite interesting in terms of a guidance for September. But you're right, I mean the inflation data is still resilient, but there are some leading indicators that they can reference that could signal that downward trajectory towards something more comfortable.
Sree, just a quick question for me before we move on to Japan. What's moving the long end of the US curve at the moment? Is it bond issuance? Is it the longer term fiscal picture? Or is it actually, as many would think it was, it's about the interest rate expectations? I can't help thinking that some of the mechanics are more, if not as interesting, as what the Fed does in terms of interest rates.
Absolutely. I think there's a lot going on in the mix at the moment. We've got a bit of a political dynamic in there as well. That some of the moves that we've seen, not just in rates but in equities as well, has been showing a shift towards what could be happening in the US elections as well. And I think it's still very early days because we've had a lot happening there. There was a bit of a Trump trade, so with that sector rotation or curve steepening in the US, a lot of that has been a partial reflection of Trump or Trump win. However, that dynamic is changing since the Democratic nomination is now looking like it's going to be VP Harris. Her running mate, the choice of her running mate will be quite critical in terms of signaling future outlook for the elections. So really that we do need to consider that as well in terms of market volatility over the coming weeks.